Hey everyone, welcome back to the channel. Today, we're talking about a huge after-hours move in HIMS and HERS health stock, HIMS. After the market closed today, the stock jumped nearly 40%, which is a massive swing for investors. This comes after a really tough year for HIMS, as the stock has dropped about 78% from its 52-week high. That's a huge decline, and today's jump has a lot of people wondering what's going on. So, before we dive into the reasons behind these moves, let's start with what HIMS and HERS Health actually does. HIMS is a telehealth company providing online access to healthcare products and services. This includes prescription medications, mental health support, and wellness treatments, with focus on convenience and personalized care. While the company gained attention for weight loss offerings, it also provides services in sexual health, dermatology, and other areas, aiming to become a broad telehealth platform. Now, looking back at the stock's recent struggles, HIMS has faced significant challenges, mostly tied to its GLP-1 weight loss drug business. The company was selling compounded versions of GLP-1 drugs like Wegovy and Ozempic, which became very popular during shortages. But as these shortages eased, the FDA issued warnings about telehealth companies marketing these compounded drugs in misleading ways. At the same time, Novo Nordisk, the maker of these drugs, sued HIMS, claiming the company was selling copycat versions without proper authorization. All of this created regulatory pressure and uncertainty around HIMS' revenue model, causing investors to sell off shares. On top of that, analysts cut their revenue forecasts and raised concerns about profitability, since marketing and expansion costs remain high. These factors combined to push the stock down dramatically over the last year. So what changed today? The big after-hours surge appears to be driven by a potential partnership between HIMS and Novo Nordisk, which allow HIMS to sell branded GLP-1 weight loss drugs directly through its platform. This is a huge development because it could remove the legal and regulatory risks that have weighed on the stock. If this partnership happens, it could also expand HIMS' revenue significantly, as it will legitimize their weight loss segment and potentially attract more subscribers. Another factor behind today's sharp move is short covering. HIMS has historically had a high short interest, around 43%, meaning many investors were betting the stock would go down. When positive news hits a heavily shorted stock, those short sellers often rush to cover their positions, which can drive the price even higher in a short period of time. Now, let's talk about what analysts are saying about HIMS. Currently, analysts maintain a hold or neutral consensus, although some have downgraded to reduce due to the regulatory and legal challenges. Overall, about 12 analysts rated hold, 3 rated sell, and 2 rated buy, reflecting a mixed but cautious sentiment. Many analysts are concerned about FDA's scrutiny regarding compounded GLP-1 drugs and the impact of rising expenses on near-term profitability. Analysts have also lowered their price targets significantly over the past few months. The 12-month forecast now ranges roughly from $20 to $32 on average, with a high estimate of $68 and a low estimate of $12.50. Here's a snapshot of individual analyst actions from late February 2026. Barclays lowered their target to $25 from $48 but maintained overweight. Morgan Stanley lowered to $21 from $40 and maintained equal weight. Truist Financial lowered to $18 from $37 and maintained hold. Evercore ISI set their target at $24, down from $33. TD Cowen lowered to $17 from $20, holding their rating at hold. Bank of America lowered to $12.50 from $13, maintaining an underperform rating. So, even with today's after-hours surge, analysts remain cautious because of the regulatory uncertainty and mixed profitability outlook. On the other hand, there are some bullish aspects. HIMS continues to show subscriber growth. Its core telehealth business is expanding, and if the Novo Nordisk partnership goes through, it could remove major risk and unlock significant revenue potential. In summary, HIMS has been through a wild ride over the last year, a 78% drop from its 52-week high, regulatory and legal pressures, and falling analyst confidence. But today's nearly 40% after-hours jump shows how quickly sentiment can change when there's potential for a transformative partnership and risk removal. Investors should still be cautious, as the stock remains volatile and highly dependent on regulatory developments and successful execution of its business strategy. Thanks for watching. If you found this video helpful, please like and subscribe to my channel for more updates on stock market moves, investment insights, and breaking news like this. I'll keep you updated on HIMS and other trending stocks, so stay tuned.